Hi everyone, my name is Sandy Swamtwini and welcome to my channel. So today I'm going to be discussing financial immigration, and the reason for this is because there's been some changes when it comes to financial immigration that have started this year. And I'm going to be discussing how it affects you if you are still going to immigrate and how the people who have already immigrated are being affected by these changes as well. Now, what is financial immigration? Well, financial immigration is when you move to another country. Now, in the past in South Africa, when you financially immigrated, you would be able to access your retirement funding immediately. In other words, if you decided next month I want to financially immigrate to Australia, you would be able to access your retirement annuity, your pension funds immediately. There wouldn't be an issue with that. However, SARS noticed that people are using this in order to be able to access their retirement funds. I mean, people use all kinds of ways to be able to access their retirement funds. I mean, I've heard people get divorces in order to be able to access their retirement funds. They divorce and then they get married again. And the sad part, in some cases, the partner who stands to benefit the most doesn't want to get married again. But anyway, we're not here to talk about that. People in the past have used financial immigration as means of accessing their retirement funds. However, the recent taxation amendment laws have tried to do away with that. And how they've done that is they've decided that when you financially immigrate, firstly, before you can have access to retirement funds, I don't know why I'm squinting, but anyway, I'm sorry, I don't know why I'm squinting, but anyway, so in order for you to be able to have access to your retirement funds when you are financially immigrating, you must have ceased to be tax resident of South Africa. That's number one. Number two, you must have ceased for a period of 3 years. So not only must you have ceased to be tax resident of South Africa, but a period of 3 years must have passed when you've ceased to be tax resident of South Africa before you can be able to access your retirement funding. Right? I hope that makes sense. Whereas in the past, you would just be able to get your hands into your retirement and your pension funds. Right now, you must have ceased to be tax resident of the country. Number two, in order for you to be able to access your retirement funds, you must have ceased for a period of 3 years. So in other words, you cease to become resident in 2021. You need to it will be 2022, 2023, 2024. Then you will only be able to access your retirement funding after 2024, after the 3 years has passed. Right? I'm sure government is also trying to make sure that people don't cease to be tax resident for like 6 months and then they get their retirement funding and then they come back and be tax resident again. So the government is trying to sort of like close all loopholes that people can use in order to be able to access their retirement funding. Okay. This took effect from the 1st of March 2021. That means that SARS said in order for you to be able to still use the old method to emigrate from South Africa, one of the things that you need to do is to apply before the 28th of February 2021, which has passed. So if you haven't started applying now, that time is past. You've missed the boat. So for the people who applied before the 28th of February 2021, another thing that you need to do is to make sure that your application is approved before 28 February 2022. So if you're sitting at home and you've already applied, then please make sure that you follow up so that your application gets approved before 28 February 2022. Because if your application is not approved, but then even though you've applied before 28 February 2021, then you will not be able to take advantage of the old way of doing things. I hope that's clear. So, well, what does this mean now? For South Africans who are already abroad and have been abroad for a couple of years, this might actually be good news. The reason for that is because they might, because they've been abroad for such a long time, they might have technically have stopped being tax resident of South Africa. And if they've been abroad for more than 3 years, chances are they meet the requirements now to be able to access their retirement funding, which is nice, right? So that's what it means for South Africans who've already emigrated. What does it mean for you who is still wanting to emigrate in South Africa? A tiny bit of good news for someone who's still going to emigrate. What is available for you right now is actually the pension fund of the employer you are currently employed by. In other words, where you are employed right now, that fund, that pension fund you have with your employer is available in the sense that you can transfer the pension fund to whichever country that you are going to. That's the piece of good news, right? So you can use that. But remember, you can only use the pension fund of the employer you are currently with, because remember, with that, you still have access to now. Well, technically, you still have access to it technically in the sense that you can transfer it. Remember, guys, when you leave employment, you give an option to withdraw, blah, 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 or transfer it to a fund. Now you can use this to transfer it to an abroad fund for yourself when you resign from that employment. But the not so good news about it is that when you do that, it is almost taxed as a withdrawal, and the withdrawal taxation fees are very high. I mean, because obviously the government is trying to discourage people from withdrawing their pensions when they change jobs. So the withdrawal fees are still very high, and that will be taxed as a withdrawal. But then at least you still have that. That's if you have traditional employment and you are still employed at the moment. So I suppose you can use that loophole that SARS can't do anything about at the moment, right? Now, so what can you do if you are planning to emigrate in the near future? Well, what you can do if you are planning to emigrate in the near future, let's say in a year or in 2 years' time, you're sitting now and you're thinking, but I really want to move to London. Seriously, as in fact, what's happening right now in South Africa, I'm sure there's lots of you that actually want to move. And by that, I'm talking about the riots and everything that are currently happening in our country. I mean, God bless our country, by the way, because it's serious and it's sad. But anyway, if you are thinking right now of immigrating in the next year, in the next 6 months, or in the next 2 years, what you can do is, if you do change jobs, cash in your pension and obviously keep it. Don't chow it. Cash in your pension. Yes, you will be subject to withdrawal fees, but then you will have that money when you eventually emigrate in a year's time or in 2 years' time. So if you, for instance, you're in a job right now, you are getting another job, but you know for a fact that, or in fact, even if you're not sure, in a year's time or in 2 years' time, you're moving to London or wherever you're moving to, then cash in your retirement, but keep it, guys. Even if you keep it in a savings or whatever, 30-day notice or whatever the case is, just keep it so that when you eventually immigrate, you have money at your disposal for whatever expenses you're going to have to be paying. And that's the best that I can give when it comes to someone who wants to immigrate in the near future, and that person is employed at the moment and has a pension fund with the current employer. So if you change jobs again in 6 months, whatever you get, cash it in, put it in a savings account rather than transferring it into a preservation fund. Because remember, that's what happens, right? When you change jobs, you have two options: either you cash in whatever you pension fund you got, or change jobs or get retrenched. It's either you cash in whatever pension fund you get, or else you transfer it to your preservation fund. When you cash it in, you get taxed high, because obviously the government is trying to discourage that. When you transfer it to your preservation fund, you don't get taxed. But then if you are someone that's going to be emigrating anytime now, then it is very important to make sure that you cash it in, even if it's going to cost you, but then you will need that money for immigration, because remember, you won't be able to get your hands into your retirement funding at all within a space of 3 years after emigrating. unless you become a tax resident for a period of 3 years. So yeah, I think I've said what you guys, I've said most of what you the new law that's been introduced entails basically. But SARS keeps on updating. If there's anything else that's been that's new, I will definitely let you guys know. You must also follow me on Instagram, because most of the times I drop the new stuff on Instagram, and then maybe later on this YouTube channel. On Instagram it's tax _shelter. So please do follow me. And also I give some more tips there, because I mean it's a very interactive app and whatnot, even though here I post at the moment on a weekly basis. Well, at least I'm hoping to post on a weekly basis, or maybe 2 times a week. I hope I can keep up with that. But then but obviously, if you like this content, and check out my other videos, and also please subscribe. You guys are watching but you're not subscribing. Please, it's going to help my channel if you subscribe, if you like the comment. I appreciate everything you guys have done. Thank you very much.